You are listening to Revealing Real Estate Podcast, where we dive into getting over your fear of taking risk in real estate and making money while you sleep. I'm Nico Pedizano, your host and real estate guru with over 20 years of experience. It's time to get real. Hey everyone, and welcome back to Revealing Real Estate. I'm Nico Pedizano, and this is your breakdown of the latest in the real estate market in the Greater Toronto Area. What's happening with prices, sales, inventory, and what does it mean for buyers and sellers in 2026? Starting off with the numbers, the GTA housing market has been softening compared to recent years. According to the latest Toronto Regional Real Estate Board data of January of 2026, average home prices dropped to about $973,000, which is the first time it's fallen below $1 million since 2021. That's roughly a 6.5% year-over-year decline. Sales volume also dropped significantly. Over 90% fewer homes sold compared to last year. Across property types, prices are down. Detached homes fell around 7%. Semi-detaches and townhouses nearly 9 to 10%. And condos, they also dipped close to 10%. This reflects a broad pricing pressure. One big theme right now is higher inventory. Active listings climbed and homes are staying on the market longer. The average days on the market rose around 45 to 67 days in January. That's a big factor, and that's a big number. Homes are lasting longer on the market, and that's because we got a lot of overpriced listings right now. More supply gives buyers more choice and negotiation power than in the frenzy markets of 2020 and 2021. So why are we seeing a slowdown? Slowing demand from buyers, affordability, challenges despite some interest rate relief, and many buyers staying cautious. Some seasonal patterns also play a role early in the year. Even though borrowing has gotten cheaper compared to peak rates, income growth hasn't kept up pace with home prices, so some potential buyers are still priced out. Overall, most data suggests that the GTA is shifting towards a more balanced and buyer-friendly market. Instead of bidding wars, we're seeing more negotiation, fewer crazy offers, and more thoughtful decision-making from buyers. Also note some analysts call this a normalization of the market. After years of rapid price runs, things are calmer, more rational, and less overheated. This isn't just a short blip. Inventory and sale trends reflect a broader shift. If you're watching the condo market closely, especially in pre-construction, which we probably won't see come back for the next 3 to 4 years, it's been one of the slowest segments in decades. With pre-construction sales dropping to historical lows, this means buyers have a lot of options, and developers, well, they're going to need to adjust pricing or provide some more incentives. Looking ahead, many experts believe that 2026 will continue to be measured. Price growth is modest or flat, and sales activity stays steady, but not booming. Some forecasts even point out to a more balanced conditions later in the year, especially if consumer confidence improves. Whatever happens, the wild price spikes of the last decade are not expected to return anytime soon. For buyers, this market can actually be a good opportunity. With more choices and less competition, you'll have time to negotiate and find deals at relatively softer prices, especially if you're a first-time buyer or an investor patiently watching this market right now. For sellers, it's about strategy. That means pricing correctly, using strong marketing and presentations, and being realistic about conditions right now. Homes that are overpriced for today's market tend to linger. Buyers are savvy and looking for value. Well, guys, that's a wrap up for the GTA real estate market update. If you found this helpful, drop a comment below. I'd love to hear from you. Hit the like button, and if you don't mind, also subscribe for more insights. I'll see you on the next episode, and thanks for tuning in.